Jeremy Awori, welcome on set.
Thank you. Glad to be here.
Yesterday's earnings were heavily skewed towards diversification of your revenue engines, and I'd like us to start from that point. I was pretty much intrigued by the option of venturing into investment banking, and more so because if you look at the investment banking landscape in this country right now, because of the thin volumes from the typical equity and debt brokerage, there's so much consolidation happening. What would be Absa's play if you venture into that?
Yeah, I think where you started on diversification, one of the strategies that we had was to diversify out our business. And we had a target of having wholesale bank, retail bank being 50-50. We're already there. Before we were much more tilted to the retail bank, contrary to what a lot of people think. People thought we were a corporate bank. Yeah. So now we've kind of got that 50-50 because we've grown our business banking, which is SME, as well as our corporate. Now, when it comes to the investment banking side, when we talk to our customers, they're doing a lot of interesting transactions, right? Some are acquiring, others are expanding into the region because they also want to diversify away from Kenya, and they've got competitive advantage that they want to be able to take advantage of. So we have often found that they go to third parties to get that advisory. And we have these capabilities within the group. In South Africa, we've got a big investment banking business. So we're able to call upon those resources. But in addition, now we're also setting up our own resources on the ground here that will serve not just Kenya, but East Africa. Because it's as you say, you do need some scale in terms of transactions. So maybe if Kenya isn't doing as many, maybe Uganda might be doing some, or Tanzania might be doing some, because you still got to pay for the team. And then I think there's also transactions which may not necessarily be those huge ticket transactions. There's a lot of private equity transactions that are happening within the fintech space. And I think the challenge for us is how do we provide that service in a way that makes sense in terms of pricing for those transactions, but also makes sense for the bank in terms of returns. And we see a big opportunity. We don't exist in that space, so it's the only way really is up, and we're pretty confident we'll be able to do that in the future.
When Absa gets into that space, would you be sector agnostic, or would you be open to all kind of across the sectors? And I'm asking this because sometimes in the deal structuring side, you can be overweight with some risks on particular sectors.
Yeah, I mean, our strategy will evolve. I mean, right now we're setting up the team. I mean, I think the macroeconomic environment is also going to influence this. We've seen what's happened in terms of FDI flows. They've kind of slowed down a bit just because of the global macroeconomic environment. I think the next few months, as we've seen, will influence a lot of things. I think it'll more influence outlook, whether people are optimistic, whether they want to come in, what they're experiencing out there in Europe, the US. So for us, you'll hear more as that really unfolds as part of our strategy. But right now, it's really more around supporting our clients, and we've got a broad base of clients. So I guess we'll look at each transaction and make sure that we can add value in those specific transactions as and when they come up.
Okay. And what sort of synergies do you see between the intended investment banking space and what you already have on the asset management side?
Yeah, I mean, they're not necessarily directly linked. I mean, on the asset management side, it's a new business. It's part of, again, a twofold approach. Our customers want more diverse instruments in which to invest. So we've got obviously a money market fund and some other funds, and they've already started investing in that. So we're seeing the uptick in it because people don't necessarily want to have to go through the trouble of investing that themselves and going and buying maybe government securities, etc. They can come to us and we manage it and give them a good yield. So I think the other part of it is that if we don't provide those services, then we risk losing part of their other business as well. So it's an offensive as well as a defensive play to make sure that they're fully satisfied, just as is lending products that support liabilities. Yeah. So and for us, we manage the broad spectrum, whether they're corporates and their employees, we can put together packages. Whether it's high net worth individuals, will come in with very specific offerings that are tailor-made to their level of sophistication and also risk appetite. And I think that's now happening. I mean, the level of sophistication in Kenya is really growing, and people are looking for these instruments.
Okay. And speak to the issue of the current strategy. 2018 to 2023, and particularly with the pillars of growth and transformation in a retail rush market like Kenya, where, as you began by mentioning, the perception was that you were more of a corporate entity?
Yeah, I mean, we were very clear when it came to the growth, transformation, and returns. So one was the previous strategy before that was kind of stabilizing the business. The business wasn't growing. We needed to invest in the business to prepare ourselves to grow, and we did that. We were trimming our business, getting out of the businesses and areas that weren't delivering value. And we did that well between 2013 and 2017. That freed up capital for us to invest in more tech. So we've invested more than 5-6 billion just in tech. And you've seen a lot of those things coming out in some of the offerings that we've talked about, whether it's WhatsApp banking, whether it's our digital finance, Timiza platform, getting into bank assurance, etc. So now when it comes to this phase, it's been much more about growth. So if you look at our growth, the revenue has started really picking up, and now you've seen it. Last year we were at 7%. This year we're at 17%, and it's broad-based, non-funded income as well as interest income. You've seen our assets growing almost 20%, and it's growing in some of these new exciting areas: the SME sector, corporate, and retail. So the growth agenda was also to diversify out, and we're excited that all our businesses are double digits. So it's not lopsided. It's not like we did some few huge corporate deals and our retail business isn't performing or our markets business isn't performing. So we're really bringing them all together. On the transformation side, it's really transforming in line with our customers' needs, what they want to remain relevant with them. And we had to do that with COVID. Ways of work had to change completely. And we're evolving and we're working in an agile way to keep pace and to keep in advance of customers so that we can serve them better. And then on the return side, obviously shareholders want returns, right? So you can't give returns, as we saw in COVID. ROEs dropped to single digits. Yeah, I mean, so we've moved from a single digit ROEs where it was much less than the cost of equity to a 23% return. So we're pretty happy. It's now we've achieved the three pillars. Now it's around accelerating into those, whilst managing stability, our capital base, and just really giving sustainable returns. We don't want to be a roller coaster kind of stock where 1 minute we're doing really well, the next minute we're not. And that's what we're known for, and hence our dividend payout.
Hinging on that point, yesterday you mentioned, and I want to quote you, dynamic and sustainable dividend payouts. First of all is that Absa has declared an interim dividend at a time when a number of peer lenders have held back. Are you guarded about the prevailing macro environment, or how do you view it?
Yeah, I mean, as a bank, we used to pay interim dividend. In fact, it was COVID that disrupted it. And then because there were so many uncertainties, we actually made the choice and said, let's hold back right now because we don't know how difficult this is going to get. And that was when we're in the midst of complete lockdown. So of course it was sensible to preserve capital. Yeah. Our business is now growing. It is generating capital. Our capital position is strong, right? I mean, our core capital is at 14.1, our total capital adequacy 16.5. So we're well above. We have our own buffers and we're ahead of those buffers. So our capital position is strong. We're confident we've invested in the businesses that will throw off growth and our fast growing sectors, because I think there were sectors in our business that we weren't in. We weren't in digital finance. We weren't in some aspects of trade. We weren't in custody. We weren't in payments. We've made those investments and they're starting to come through. So yes, it is a difficult macroeconomic environment. So make no mistake, we're not rushing headlong into some of these things where we pay for it. In fact, I would actually argue that we're probably more conservative than most of the market. If you look at our NPLs sitting at 7%, the market is at 14.7, right? So when we look at it, we're careful. We take the difficult decisions around either provisioning or not getting into sectors when everybody else is. That sometimes may look like it may dampen down our overall profits, but we still get consistency through the cycle, and that's typically been our approach.
You mentioned yesterday a return to custody business, and I'm curious, why at this time?
I mean, when we were in the custody business when we were under the Barclays brand, and then Barclays decided, I think that was around 2011, if I'm not mistaken, they decided that they didn't see the fit for the custody business across Africa for their own strategic reasons. So they exited custody and they sold the custody business across the continent. We feel, as Absa, that the custody business offers opportunities for us to grow. And that's why we've gone back into it. So a number of markets are getting into the custody business. We are one. And we see, again, it's a way of offering value to our clients. And we're optimistic about that business because it has certain knock-on benefits to our other business, like our global markets business as well, and connecting to our global clients also. So many of them have come and said, do you guys have a custody business? We'd like to work with you, and we didn't. Yeah. And we had to go, why now? We had to go through a period where we could not launch a custody business as part of the contractual sale arrangements, and that was obviously passed. So we are now free. And anyway, we're not connected to Barclays in the same way we were, and that's why we're getting back into it.
Final question, Jeremy. We are in an environment where there's a bit of uncertainty around Kenya's operating environment in view of the politics that is emerging. How are you calibrating yourselves from a risk standpoint, at least in the period ending 2022?
Yeah, I mean, we take a very eyes wide open view. I mean, I think, like I said, the macro environment is complex, so we look at that very closely. We look at various risk indicators, and that informs our approach in terms of the macros. And we even take macroeconomic overlays when it comes to our provisioning. So we're actually quite conservative on that side. I think elections is a cycle, right? Everybody blows up elections when we are in them, like the world is going to end with elections. Our view is elections is part of the political process. They will come, they will go. We still remain our optimism in the medium to long term. We still continue investing. I think the broader things we should watch more are the environmental, economic things. We're seeing inflation being quite high. That obviously is going to bite in terms of people's disposable income. We're seeing those supply chain disruptions. That's obviously going to impact trade flows. So those are probably going to have a bigger impact than the elections themselves. But we hope we go through a stable election process because that brings back confidence. Kenya is a hub. People want to do business here. Let's make it easy for them to do business here. We don't want negative news out there. And I think we saw it in the first round of these elections before the petition. People are peaceful. They accept. People have voted. We'll go through this process.
And go back to work. And I think, to be honest, we've all had a hard run with COVID. I don't think people want a harder run after this. Jeremy Awori, thank you so much for your time.
Thank you.
I really appreciate it.
Yeah, glad to be here.